In the real world, it went up a lot to come back down to where it was in March 2024. And in the interim, it's been a lot lower actually. Although please note that when we had the 1.7% CPI in September 2024, for example, it was because of base effects dropping out the figures when it had really been raging at 5% and well above that at certain points in time. The Doves interpreted the rapid fall in goods prices and the normalisation of food prices as evidence that the inflationary impulse had faded and that services inflation, a lagging indicator, would inevitably follow the downward trend of the headline rate. Is it really inevitable? Well, it's been a very, very slow move downwards in services inflation. And whilst the 4.1% minimum wage increase, okay, add on pension, add on NI, apart from anything else, that looks like more like 4.9% at the margin, was praised by me earlier on for being better than 6.7, is still well above the 2% target. So I'm still sceptical on that one. What about implications of the split for future policy? Well, this just vote implies extreme policy fragility. One single vote would have resulted in a hold. As I said, one more dove, one more hawk, one fewer dove, etc. would have made all the difference. But the lack of consensus means there's no forward guidance at the moment from the Bank of England. It's not possible. It's effectively useless. What Mark Carney sought to do when he was the governor would simply not be working at the moment, because who listens to a committee that can't really agree amongst themselves? It's meeting by meeting decisions at the moment. It's backward looking data. It's difficult for people to take a view on long-term interest rates at the moment. What does this mean? It introduces volatility. We can't assume a linear pace of cuts like 25 basis points every quarter. That's pretty much what we have been having for nearly the last 18 months now. Of course, we've gone from 5.25 to 3.75, but the hawks are still fighting the previous war. If services inflation even ticks up marginally in January or February, the cutting cycle could abruptly halt, leaving those who bet on cheap money in Q1 2026 exposed.